All right, Bulls, how we doing? What's up? It's Chase. It's the Stock Sherpa. This is for the Substack. Hope everybody's having a good day so far. Hope everybody's looking forward to a good week of trading so far. And I hope y'all made some money on that. The call on Academy Sports and Outdoors. If anybody followed that one was a winner. We also had the consumer staples that popped up. Tech bounced back a little bit. We're going to get into that some here. But thanks for tuning in today, and let's get y'all all set up for the week ahead. What's been in the news, guys? So first of all, everbullish.com. If you're a YouTube watcher, if you're a fan, if you are a customer that doesn't pay for the Substack, go buy the Substack. But also, this is where you go for the library of all the investing articles and lessons that are free to the public. All right, so the game plan for today, it is the 12th. It's 12/12/21. We're coming in on the last two trading weeks of the year with a little Christmas interruption in between. So what does that mean? If anybody's been following anything, especially with what I've been saying and what the news is telling you, and just opening your account a couple times a day, it's ping pong. This is Forrest Gump Chinese ping pong. This is fast moving ping pong. This isn't the kind of market I like to invest in. I like to trade in. We sold out of our professional portfolios already here at Ever Bullish, but we also have a couple things that we've taking some losses on, and also just not knowing what to do. So if you're holding anything and you're not sure what to do, my advice is get out. If you're not going to get out, follow some of these tips. So back here we are. What I have here for today's Substack blog post is Bulls. The market is ping pong. It doesn't look like it's going to be stopping anytime soon, but I still have some winners for you, and I do. So what do we have? First of all, let's just take a little bit of look at what's been going on lately. I thought that this was kind of indicative of the market. So this is from my Stockmaster app. This is the app that I always keep on here. I've told you guys to go buy it. If you don't have it, go download the Stockmaster app. It's the best app that there is for quoting, and also it's free. So I've said go buy it, don't buy it, go download it. Even I, a professional investment manager, do not have the paid version. It's no big deal. It's awesome. It's a great resource. If nothing else, you're welcome on that. But back to Ever Bullish. So this is the news headline. I'm going to read this from the bottom up. This is so interesting. November 18th, Apple accelerates work on a car. Dow slides 20 points the next day. Dow slides 20 points. These tech giants are now in buy zones. Now the 25th. Dow future falls. Oil prices up. Treasury yields sell off hard due to the new COVID concerns. Next day, Dow Jones dives 900 points on new COVID variant fears. Lucid, Rivian, Tesla fall. Next day, Dow rallies after stock market rout. Vaccine maker Moderna doesn't even say what. It's trying to get us to buy Moderna, right? The next one, Dow sells off as Moderna CEO leaves. The next one, Dow rallies 400 points. Next one, Dow fades 500 points. I couldn't make this up. Apple gaps up on iPhone report. Next one, U.S. adds 200 jobs when they thought they were going to add 560,000 jobs, right? The next one, Dow rallies on Pfizer. The next one, December 9th, stock market broadly lower. Then the next one, the 10th, stock futures rises, investors digest CPI and inflation numbers. Get the out of here, right? So this is the reason I like selling out when things get sketchy. I have another thing. We're going to get on this right now. I know a lot of financial planners subscribe to my Substack. A lot of so-called financial planners also are out there selling products and using my guidance as what they tell their customers to sound intelligent. So here's the deal. I'll put this up on my Instagram. Ever Bullish Instagram. If you're not following it, you should be. This is a crazy one. If you have $1 million portfolio at the current rate, you are losing $68,000 a year to inflation. Yet financial planners are recommending 30 to 50% of your assets in bonds because they negatively correlate to the stock market. BlackRock just came out and said this coming year is going to be the year of the stock picker. What's that about, right? I've been saying that for the last 5 years, beating the market for the last 12. But you should buy this mutual fund that has a 1.5% expense ratio, or this managed account that has a 2% expense ratio, so that you can get 8% a year. Y'all know how I feel about that. Go to everbullish.com, buy one of the portfolios there. Secondarily, let's take a look at the impact of inflation as it, so I'm just calling advisors criminals, which I believe that they are. I believe that newsletter investing is the future. You already know that. I'm not going to stop screaming it from the top of the mountains because I'm the Sherpa, baby. All right, Wall Street Journal. Go read what I wrote about advisors, though. That's pretty funny. Wall Street Journal this weekend, if inflation rate persists, it hits the fastest pace in 39 years. Well, we knew this was coming. We've been pumping steroids and juicing up the market more than Mark McGwire and Sammy Sosa were juiced back in 99. This thing is on steroids. Of course, at some point, the party's going to be over. The beer's been flowing for way too long, guys. A couple other market things. Texas abortion law, yeah. Stranded ship that wouldn't help, yeah. Omicron, the metal band makes the best of its name. I guess there's an Omicron metal band. And then over here in the corner, we do have GM picks up Michigan for 2 EV products. Y'all know that I am the EV Sherpa, and I love EV, and one of my trades is EV based in here. So that's what's up there. Last time we went over a couple things. Number one, rule it ever bullish, follow the Fed. That's why I'm out on most securities. That's why I don't like tech. That's why I told you to sell out of your portfolios. That's why my customers did. The Fed said, we're not going to use inflationary term. This is my 3rd week in a row of saying this. I'm going to take it off the blog next week. But remember, the inflation is now all of a sudden not transitory. That's how quickly these things can change. Then the second thing is just in general, guys, why would you ever want to be invested over the last 2 weeks, especially for long-term holders, over the last 2 weeks of any year, when all the hedgies are out on their yachts, when no one's really paying attention to the market, when people are turning off their contributions to the 401k plan so that they can buy Christmas presents, you know, when there's travel involved? It's just not a good time to be invested. Ever Bullish sells out of its portfolios on December 15th. And in this case, I told you to on the 3rd. So, one-day performance, tech bounced back on that last day. Second to tech is consumer staples. We made money in that trade last week. You're welcome. Go buy me a cup of coffee, baby. Energy was the next one. If we look at the 1 week performance, we had tech bounce back. We had energy second, which I actually really like that. Not enough to buy it right now. I'm holding a little bit of Devon options that you guys know about. I told you all about that. But then staples. When staples are beating discretionary, get out of the market. That's just a good lesson for all my bulls out there. And then energy. By the way, bulls, I hope y'all got y'all's Christmas cards in the mail. If you did, you know, very cool. And thank you for being a bull. Secondarily here, energy prices. So I did like this. I really like that energy prices popped up this past week. Energy prices are now, we're looking at Brent crude at 75. We're looking at West Texas, which is what I go by, at 71. We were in a pretty ugly area just 2 weeks ago, last week, down in the 60s, right? Now we're popping back up. I actually like this. I love this going into next year because there are some energy names in the Ever Bullish all stock portfolio for 2022. Go buy it. We haven't got cold yet down here. I don't know how the north is doing. I know it's a little bit cold, but truly some of my favorite ideas here are going to involve the natural gas space. I really feel like it's stabilized. I think prices might go a little bit higher, so I'm pretty bullish on that, but we're going to keep a watch on that. So all around, actually, when it comes to the energy sector, I'm turning more bullish. I'm not going to trade anything this week on the energy sector, but it will be good for next year's portfolios. And by the way, we've just been crushing energy all week, or all year, that is. Crypto prices, this is another thing that turns me on a little bit. I think that the negative correlation, it used to be inflation is up, then crypto is up, right? But then it was inflation is up, and then crypto is way, 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 way down. I think we're realizing, look, the cryptocurrencies aren't just going to collapse because the dollar is collapsing. It shouldn't. They're supposed to counter each other. So I think that this makes a lot more sense, and this actually is putting a lot more interest in my eyes on some of those names. I still like Hut. I still like Mara. I still like Riot. And I still love XPDI. So those are the ones that I want you to bet or gamble or buy or invest or option trade or whatever you want if you are bullish on the crypto sector. And then remember, I love Solana. I think you should go open up a digital exchange somewhere, Coinbase, crypto.com, any of those, and just start putting a little bit of money in Solana. You don't want to be the one that misses it. I think Solana's got just as good of a chance as any of them, besides Ethereum is my number 1, Bitcoin is my number 2, Solana is a very distant 3, Ripple's behind that, and then I don't follow any of the others. All right, I have a big one for you guys. Sorry it took me 10 minutes to get here, but I want you to go buy a stock tomorrow, and I want you to hold it for a year, and I want you to see how much money you make. This stock is called Albemarle. Albemarle is a global chemical specialty chemicals companies. And the reason that I like them so much is Albemarle, not only does their chart look like that, who wouldn't want to buy that chart right there? Yeah, not only is it up 55% so far this year, I just think that it's one of the best stocks that there is for this very reason. I love lithium hydroxide. I told you guys about LAC. We've already tripled our money in that stock since I told you about it 3 months ago. This stock may be better than LAC, and here's why. They are a specialty chemical company. They specialize in rare earth. They know how to get the lithium hydroxide out the ground, but they don't have very many plots of land. Well, Chase, well, Sherpa, baby, why are you recommending this to me? The reason I'm recommending this to you is that they are the only company that is publicly traded that has well-invested technology and expertise when it comes to taking crashed car batteries and then refining them back down to extract the lithium back out of them and what is left. And it's not only cars, it's laptops, it's battery packs, it's everything, it's solar energy storage packs. They have the wherewithal, the knowledge, and most importantly, already established the ability to refine lithium hydroxide, lithium ions in this case, back out of batteries that have been wasted. So they are the recycling. Think about it like these guys could buy up all the cars that had crashed in the last 50 years and then pull out their gas tank and then resell the value of that gas. Now apply that to battery. I'm excited about this one. ABL, I'm buying it this week. So that's how much I like it. I always tell y'all when I buy stuff, ABL, Albemarle Corporation. Secondarily, short and sweet, UGE, triple on the consumer staples. When I'm not bullish on anything, when I see consumer staples, the head sector on a week or on a day, especially when it's 3 points ahead, 3 percentage points, that is 300 basis points ahead of the consumer discretionary field, that means that it's time to start playing defense. It's time to, put a couple extra defensive backfields back there, play nickel, try to knock down the passes, right? We're not trying to score touchdowns right now. We're trying to knock down the passes. And then finally, I got a favorite option for you guys. There's an option trade that I like. The option is on the banks. The banks have been sold off. Remember FAS? I told you about it when it was at 120 back in August. It went all the way up to 140 a couple of weeks ago, and then it sold off hard. Banks should not sell off as hard as they sold off with inflationary numbers. Because how do you battle inflation? By raising interest rates. I don't think they're going to raise them very quickly. I tell you that all the time. But the market thinks that they're going to have to raise more quickly, and they're going to start to taper, and interest rates are going to go up, and blah, 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 blah. Well, none of that's going to happen, but the market is going to react as though the direction for interest rates to go is actually up and not down. I don't think that that's the case, but I think that the market thinks that's the case. And I want to show you this chart here on FAS. Y'all know this thing moves fast. This is like the triple leverage. This is like the lab U of the financial sector, right? And I like the 130s, and I like the 130s in, so right now it's trading at 129, and the strike that I like on these is going to be the January 28 130s. They cost $10, so they're a little pricey. Buy one or two, put $1,000, $2,000 in it. I think you can easily double your money by the time that time comes, and if not, I think you'll at least make another 20 or 30% in a week, which is what we do here at Ever Bullish. So thank you guys. I'm sorry for the janky setup. I have another computer coming. It's in the mail. This whole chip shortage is a big pain in the ass. But I'm still making the videos for you. I'm still getting it out there for you. Please share my message. My goal is to become the #1 Substack for financial trading that there is, and I believe my content speaks for itself. So all you YouTubers, what's up? Come join the Ever Bullish Substack at thesherpa.substack.com. And most importantly, this is for you guys that are already with me there, and for my OG bulls all around the world. So thanks for making this movement a beautiful thing. Merry Christmas to everybody. And while we're at it, AFG, LFG, LGR, let's get rich. Let's go.